We're diving straight into an analysis report titled Urgent DVLT Update, What You Need to Know Before Monday.
Mm-hmm.
It's a very high-energy, bullish argument for DataVault AI, and it frames a recent 4% drop as a, quote, massive discount.
Yeah, this is really high conviction stuff. It's built for a very specific tactical window. And given that, the target audience here is expert level, we found 3 big opportunities to really strengthen this thing.
To turn it from just persuasive into something more.
Exactly. From a good argument into, let's say, an intellectually weaponized tactical breakdown.
Okay, let's jump right in then. First opportunity, the structure, and really that whole premise of urgency. The crucial urgency around what you need to know before Monday needs, well, a stronger structural justification much earlier in the analysis.
I see what they were going for, though. The author leads with this raw emotion, right? Stop what you are doing. It's designed to grab you.
Of course.
But the weakness here, I think, is that the actual logical data, the stuff that validates the ticking clock, is buried.
You're talking about the technical setup.
Yeah, exactly. The whole make or break zone, the 1.36 support level, the oversold RSI, that's all the way in body point 3.
And for an expert reader, that's a problem. They're going to mentally file this under hype before they even get to the data that proves it isn't.
Right. You're relying purely on dramatic framing, and that diminishes the authority of the alert right out of the gate. The why now is hidden way too deep.
I do wonder, though, if you move all that technical stuff up front, do you lose some of that high-energy rhetorical punch they were clearly going for?
That's a fair point about the tone. But I'd argue that for this specific audience, for the expert, credibility is the highest form of energy.
Okay.
I mean, we're talking about a window of a few hours here, not weeks. So the technical setup, that is the drama. The reader needs to see the price level being tested right away.
So the suggestion isn't just to, mention the chart earlier.
No, it's to functionally integrate those key trigger points into the intro, and this is what I'd strongly recommend, move that entire technical analysis section to be body point 1.
Just put it right up front.
Put it up front. Anchor the before Monday claim with hard data immediately. That way, the reader doesn't have to wait to validate the headline. They see the anchor point, that 1.36 line, and they instantly accept the premise.
It weaponizes the immediacy.
Totally. It turns a speculative alert into a tactical plan.
Okay, so let's talk concrete examples. If they don't want to move the whole section...
Right. If they're resistant, they at least need to weave the key data points into the opening. So instead of just saying the stock is winding up...
You follow it with something data-heavy.
Exactly. You could say something like, we are sitting precisely on the 1.36 immediate support level, a crucial technical pivot, and the severely oversold RSI dictates that Monday's volume will determine the immediate trajectory.
This isn't just a discount, this is a coiled spring on a verifiable technical boundary.
Yes, that one sentence validates the entire UArgent banner. It satisfies the expert reader immediately, and it gives an intellectual defense for all the high-octane language that follows.
It tells them, we know what we're talking about, and here is the hard line in the sand.
Exactly.
That focus on immediate, data-driven authority really sets us up for the second point. So we've established the timing. Now we need a bulletproof argument. Let's pivot to that huge valuation gap the report highlights. While the report makes a strong case for a disconnect between the $138 price and the $7.14 target, it lacks any real engagement with what's actually driving the price down right now.
And that gap is the core hook, isn't it? A 400% gap is massive. But I stumble on the reasoning.
The panic sellers?
Yeah, just labeling them panic sellers feels a bit dismissive. It overlooks the fact that the market is clearly pricing in some kind of significant risk. There's a reason for the price.
Precisely. A knowledgeable reader knows the market rarely gives you a discount that big for free. There's a concern priced in, rational or not.
And the report just makes this critical assumption that the 714 targets are, inherently correct, without ever asking what the counter-narrative is.
Right. It fails to anticipate the very first question a skeptical investor will ask.
Which is what?
If the upside is so obvious, why is the stock so cheap? Is it dilution risk? Is it execution risk in their live events division? Maybe it's the debt structure.
And if you don't name and diffuse those concerns, the reader's just left to assume the analysis is incomplete.
So the suggestion here is a strategy of preemptive defense.
Get out ahead of it.
Exactly. Acknowledge the specific counterarguments that could explain the low price, and then use the report's strong fundamentals, the 148% revenue growth, the AI exposure, to show why those concerns are misplaced.
This is so important. It turns the analysis from just a bullish affirmation into a real, intellectually sound debate. You're anticipating and refuting the bear case.
It builds so much more confidence. So for a concrete example, you could show that analyst ratings graphic, which is already a really strong visual. And then you pivot. You ask, so what is the market missing or discounting that's holding the price at $1.38? And then you give the rebuttal.
You could even tackle the most common concern for a growth stage company. You could say something like, we know the market might be concerned about recent expenses related to scaling the live events division.
And then the rebuttal has to be immediate and just crushing. You follow up with, but the 148% revenue growth and monetized data strategy fundamentally offset that concern, making the low price an overreaction.
Yes, you've provided the intellectual defense. You're showing the reader you've already factored in the risk, you've weighed it, and you've determined the reward is worth it.
It's the difference between just stating a belief and actually proving a case,
Absolutely.
which strengthens the credibility tenfold. Okay, so that leads us perfectly into the final core argument, the dual threat play. Our third opportunity is about how this key narrative can be better defined. The dual threat play involving AI, data science, and crypto assets is a key strength, but right now it just remains, well, conceptually abstract. There's no defined synergy.
Right. As it's laid out, the report just lists the two assets, AI, data science, and crypto holdings. They're like two separate bullish bullet points.
You've got the AI scaling in live events over here,
And then the crypto assets over there, just described as an added value component that's heating up.
But the problem is, the analysis never establishes how they interact. How do these two very different assets create a value proposition that's greater than the sum of its parts?
Exactly. Without that connection, that crypto kicker just feels speculative. It feels like an add-on that any tech company could just bolt onto their balance sheet to look trendy.
It doesn't feel integrated.
Not at all. And if they're just two separate things, a savvy investor is probably going to discount the crypto part completely, just see it as noise.
The report calls it a dual threat, which implies some kind of compounding, self-reinforcing loop.
A synergy, not just adjacency. And we need to see that loop defined.
So the suggestion is to really strengthen that section by providing a clear, actionable thesis on the functional relationship between the AI ops and the crypto strategy.
You have to define the mechanics that link them, financially and operationally.
So let's talk about how you could do that. We could probably articulate this in a couple of different ways, right?
I think so, yeah. Let's explore two. The first option could focus on how the core business fuels the crypto side.
Leveraging that high-margin revenue stream.
Right. You could elaborate on that connection. You could say something like, the AI data science operation provides this high-margin, predictable revenue stream, which then fuels the balance sheet's aggressive, strategic deployment into crypto assets.
Ah, so you're creating a compounding growth mechanism.
Exactly, where operational excellence directly funds high-growth speculation. It functionally links the data business to the crypto treasury.
That works really well. It grounds the speculative part in reliable cash flow. So what's the inverse? How could the crypto support the AI operations?
Well, alternatively, you could explain how the crypto holdings provide a kind of liquidity advantage or capital efficiency that directly supports scaling the data side.
Okay, how so?
For example, you could suggest the crypto assets act as a low-cost capital base, maybe through staking, maybe through some DeFi strategy, and that provides capital for rapid, non-dilutive reinvestment back into the AI infrastructure.
So in that case, the crypto isn't just sitting there, it's actively working to help the primary business engine.
Either way, the two elements have to feed each other to really earn that dual threat title. That kind of specificity is what an expert is looking for. It elevates the whole thing.
That focus on integrated fundamentals, that's exactly what a sophisticated reader wants to see.
Right. If the parts interact in a unique way, the analysis just gains so much more depth.